In this video, I want to talk about money and finance. And let's say you have an idea for a product or a service. And let's say you have a project, let's say you have an oil project, just as an example. And you need $1 million or $5 million, $10 million, whatever it is, you need that kind of money. Now, how do you start? Where do you get that kind of money? Obviously, you can't go to the bank and say, hey, give me a loan, because a bank needs collateral or securities, and which you don't have to provide, like most people. So how do you go about this? Now, there's a solution. It's called private equity. And this is how it works. Let's say you build a company, and you incorporate a company, and you call it, let's say, ABC Corporation. So ABC Corp is a new company that you start. And now you say, okay, we're going to start with 100 million shares that you have at the beginning of this company. And as the founding member, you have, let's say, 20 million that is part of the management group that you issue and that belongs to you. And maybe another partner or whoever. Okay, so 20 million shares. And then 80 million shares could be issued and, let's say, given to investors. Now, typically when you start out with what they call a par value. A par value is the first value of a stock, and it could go as low as 4 zeros after the dot here, and that will be your initial par value. Now, what does that mean? It's basically just a technical number when you incorporate a company, but basically your company doesn't have any value yet. Nothing is in the company. It's an empty shell. Now, when you start, you have nothing in the corporation, but now you are going to put in money. So let's say you're going to put in $10,000 and your partner is going to put in $10,000. So now, let's say $20,000 come into the bank account, and now all of a sudden the company has more value, right? There's a little bit of value there, not much, but a little bit of value. So now the stock price is, let's say, 0.001, so as an example. And then you say, okay, let's get that oil project or gold project or whatever your company wants to do. And you get, let's say, an option. And let's say you spend $10,000 to acquire this option. And now you have the rights for this project, okay? And now you have a project in the company. Now with this project, you must, let's say, in 3 months, raise $50,000 in order to acquire the project fully into the company. At this point, you only have an option to acquire the project. Okay, but now because you have this option, your company's more worth. And let's say at this point, the share price is 0.001, so 1 cent, okay, because it's just an option. Now you get this geologist or another important management member on board, okay, let's say geologist or another management member, and this now increases the value of your company even further. And let's say now you're 25 cents, okay, 25 cents per share. And at this price here, you make what they call a first private placement, which means you're going to raise money from investors at 25 cents a share. Now you decide, how much money do we want to raise? And let's say now at this point, you want to raise $500,000, for example, okay? $500,000, because that's what you need to acquire the project, to do the work, let's say to drill holes, to get it into production, to do whatever. Okay, so $500,000. Now, how many shares is that? Obviously, it is 2 million shares. Huh? So you get 2 million shares at 25 cents, and that gives you $500,000. Okay, so now what you have to do, or what your job is, you have to go out there, find investors, and raise capital based on this project that you have and you can sell a maximum of 2 million shares at 25 cents. And let's say you were able to do that. Now, how do you do that? Very simple. You need to have what's called a private placement memorandum, where you, or a PPM basically, where you write out all the details about what you intend to do and so forth. Then you need to file with the SEC that your intention that you want to do that. And if you don't have a brokerage firm to do that, you can do that as the management member, as the company, and you can legally now go out and raise money. And you use a share subscription agreement, or SSA, which is a contract that outlines all the details of a share purchase. Now you go out there and you raise that money. Okay, now once you raise that money, let's say you successfully bought the project, did the initial work, and so forth. But now you say, let's do a second round of financing. Let's say we do it at 50 cents. And now we want to raise $1 million. Okay, so now $1 million, which is another, let's say, 2 million shares. Obviously, because 50 cents times a million is 2 million shares. And now you have 2 million shares sold. Again, you raised $1 million from, let's say, investors. How do you do that in detail? I will explain in another program, or if you want to talk about it with me personally, I can teach you this. But basically, now you have $1 million in the company, and now you can acquire a second project or a third project, or do whatever you want to do in your business with that kind of money. And let's say you plan to have an IPO at, let's say, $1 first price, where, let's say, your initial shareholders here will have an exit strategy. Now, why do we do that? Because it's a motivation for someone to invest at 25 cents. It's also high risk because at this point, there's no track record and you don't know if the project is going to be good or if it's going to fail, or a million things can go wrong. But if it goes right and someone, let's say, invests here, $10,000 or something like that, then at 25 cents, and he can get it out in the public markets as $1, that's 4 times his money. So he makes $40,000 out of his $10,000. So that's the motivation why someone would be willing to invest that kind of money. Now here, someone who invested 50 cents has a little bit of a better, let's say, position, because he already knows that you've already acquired $500,000. He already sees what you have done. You already developed the first project, but also now there's still a lot of risk, obviously, but now he can double his money and get $1 when the company goes public. And sometimes this process of raising, let's say, $1.5 million might take you a year, maybe 2 years, whatever, maybe quicker to do so. And then maybe a year later, you go public. So in a matter of 1, 2, 3 years, someone can double or quadruple their money with that kind of investment. So that's the motivation for someone to invest into a project like this. Obviously, it's a high-risk project, but at the same time, you as the entrepreneur or the person who believes in this project can sell it, with emotion, with heart, however you want to do it, because you really want to make this project happen. So if you have the best interest at heart for the investors and you try your best as an entrepreneur to make this happen, this could be a real success story for your investors and make them really happy. And this is how private equity works. So people buy shares of a private company that is not yet listed or public, so to speak, and with the intention of the company going public in the stock market and getting listed at an IPO. Now, if you do your job right, business-wise, company-wise, let's say your outlook is to have a share price of $2 to maybe eventually $5 or $10, whatever, but it's possible that in the long run, you can develop your company to a point where it's going to be even more successful. And this is how the private equity process works, and how you can make money by funding a project, by making it successful, and your investors make money by buying private shares, and eventually the company goes public in the stock market. Let's talk about making money. And I think a lot of you are going to be interested in that. I was in a position at one point where I made over $100,000 per month. Okay. And this was amazing. It was really cool. I can tell you that. And I tell you a little bit later how exactly I did that. But how can you on earth make $100,000 a month? How is that possible? And is that even realistic? Okay. Now here's the thing. Whatever you want to achieve and what you believe, you can make happen. Okay. Now, is it realistic? Of course it's realistic. Why? Because there's many other people out there who make $100,000 per month right now. Is it doable? Let's look at it. Okay. Example. Let's say you have a, coaching service or business, okay? And let's say someone signs up for your coaching service or consulting service or whatever it is that you provide, and you charge $5,000 for your service. Now, in a month you have 30 days, but let's say realistically you have 20 days in a month from Monday to Friday where you can really count as working days. But every single day you sign up one client, so you sign up 20 clients, and what do we have? You make $100,000, boom, in 1 month. So, did I say it was easy? No, of course not. It's not easy, okay? It's doable, but it's not easy. So you can get 20 clients, so one client a day, who signs up for $5,000 for your service. And if you do that, you make $100,000, but you have 8 hours in a day. And, figure out how to do that. One example. Another example. Let's say you're in real estate and you have a 3% commission, for example, but you don't sell homes for $200,000, $300,000, $500,000. You sell a home for $3 million because you only go after the expensive homes, and what happens? Boom, 3% is, maybe it's 3.5 million, okay? So there you go, have another option or opportunity to make $100,000. Another thing is, let's say you raise money, okay? You sell shares for a company, like I just talked about, private equity-wise. And let's say you have a 10% commission, let's say, on money that you raise. And let's say you raise $1 million in 1 month, okay? And that's really doable. It's possible, and I've seen it happen all the time. 10% of 1 million is $100,000 per month. Okay, so I just gave you 3 examples of how it is possible to earn $100,000 per month. Is it possible? Yes, absolutely. Is it difficult? Yes, absolutely. It is doable, but it takes a lot out of you. Now, why should you have the goal of earning $100,000 per month? Why is that even necessary? Okay, now let me tell you. If you set the goal at earning $100,000 per month, what happens inside of your head? You start to think in new ways, in new opportunities. You start to do things differently. You can't just take a regular job because no job will pay you $100,000 a month. It just doesn't exist. It's not possible. Okay, unless you're the CEO of a major bank or something like that. Okay, but it's not normal. So you need to find ways of how you can make this kind of money. So things in your head need to switch around a bit. So $100,000 per month is something that motivates you. That is a huge goal. It's a driving force. And if you can go for it, you can make it happen. But let's say you set your goal at $10,000 a month. How much drive and motivation do you have to achieve this? It's maybe not that big of a deal for you because maybe you've done it so many times before. And $10,000 a month is not really that great of a motivation, okay? So what happens usually when you have a small goal, you just don't really give it your all. You just kind of wait around and then eventually like, oh, okay, maybe I should do something about it. But you don't have that energy. You don't have that power to make it happen. So what happens here, if you try to do it, but you only get 30% of your goal, you only get $30,000 a month. Well, it's better. It's 3 times more than $10,000, but you tried to go for it. So the thing is that if you try to go, obviously, for the stars, you might not get them, but maybe you'll land on the moon, okay? But if you just have a small little goal, it's not going to be inspiring. So I encourage you to think big, to plan big. When you have goals, whether they're financial or business goals, to think in big terms. Because how old do you need to get in order to play in the big league? Okay? Why should you limit yourself? Why should you, do a mediocre job? Okay, it's not necessary. So go for big goals. They're not easy, but they're doable. Okay, and making $100,000 per month is doable if you have the right plan, if you have the right strategy. So figure out the right strategy. Now, how do you do that? Sometimes it means sitting down with a piece of paper, writing down the goal on top, and then finding 20 different ways of how to make that happen. So to brainstorm. So I encourage you to be creative, to brainstorm, and to think outside the box. So to give you an actual practical example of how I did it, and it started with one company here, with the first company, which was Hemis. When I started with Hemis, I gave myself a salary of $10,000 per month. And then as we raised more money, as we founded more companies and so forth, we had a second company, and I was the manager, the CEO of that company too. And I paid myself another salary of another $10,000. And mind you, $10,000 was not really that big of a deal, because for a manager in a position of someone who has big projects and raises lots of money, it's a regular salary, and for a management salary, it's reasonable. So what happened? I ended up with 5 companies in total, where I had 5 times $10,000. But then I also had sales organizations. So I had 3 sales organizations, and we raised between $1 and $2 million per month. And depending on what kind of deal it was and so forth, I had about 3% of whatever was sold. Okay, so 3%. So if you take 3% of a million, that's 30,000. So it was between 30,000 and 60,000 every month. And so if you take 50,000 plus that, you're over 100,000. And that's how I made it personally. So just to show you, to give you some examples, maybe to be creative, maybe one company alone is not going to be the solution. Maybe you need to have several companies like I had. And maybe that's the way for you to go. So be creative. Think about how you could build your empire, how you could build your companies, and make it happen.